Hello, ladies and gentlemen. I'm delighted to welcome you to today's webinar, where we're going to delve into the critical role of hyperautomation in mitigating fraud risks in today's dynamic financial landscape. My name is Kris Vandenberk, your moderator for this panel discussion. We have a fantastic panel of industry experts who will be sharing their insights and knowledge with us. So let's meet our esteemed panelists. First up, we have Ajit Gaddam, Senior Vice President and Head of Fraud Technology at Wells Fargo. Next, we have Paul Chang, Head of Payment Networks for AWS Financial Services. Next up, Rajesh Iyer, Vice President and Global Head of Artificial Intelligence and Machine Learning for Capgemini Financial Services. Also for Capgemini, Shankar Ramanathan, Global Leader of Artificial Intelligence and Machine Learning. And completing our panel is Veselin Pizurica, Chief Operating Officer and co-founder of Waylay. I'm truly excited about the insights and perspectives that our panelists will bring to today's discussion. So without further ado, let's dive right in. Let's start by taking a snapshot of the current landscape. Ajit, can you share some of the most notable trends and developments in financial fraud that you've observed recently?
Some of the ways fraudsters are evolving, especially when it comes to using modern AI capabilities, the chat GPTs of the world, the LLMs of the world, the evolution of the Nigerian prince-based phishing emails are long gone, right? They have evolved to be highly sophisticated. We're evolving with, I guess, as the world transitions to more and more a digital ecosystem, the desire for a customer to experience near real-time or instant gratification from a payments perspective or a monetary instrument perspective is growing even more and more, which means the fraudsters are also able to take advantage of that near real-time state, be able to move assets from a genuine customer to their ecosystem. The adaptation of them to a cryptocurrency, to various mule techniques. It's amazing and extraordinary to see the evolution of the fraudster. And again, how do we, as defenders, how do we adapt to such techniques? How do we move from rule-based or simple automation to what I guess we would truly call as hyper-automation through the taking a lens of link analysis, taking advantage of data, taking advantage of AI, and moving into automation, right? So I'm really excited to where we're headed, and especially as defenders.
Maybe moving on to Paul, it would be great to get your perspective, and I guess from Amazon's point of view, when we're more and more in an online environment, an online space where equally customer experience matters, I would like to get your view on things and whether you concur with Ajit or not, and whether this poses like challenges, I guess, but equally opportunities for you guys.
Sure, thanks, Chris. It's kind of, as Ajit mentioned, right? The growth in payments via the digital online channel has been accelerated by the pandemic. Fraud occurs via online transactions at a rate that is 3 times higher than physical point of sale transactions. In fact, Juniper research forecasts online payment fraud will exceed $343 billion for the period between 2023 and 2027. We see banks and payment companies continue to invest in security technologies such as multi-factor authentication and encryption. They have also put into place multiple layers of protection, such as behavioral biometrics and session intelligence. So these companies are collaborating to feed their anti-fraud system by combining transactional data such as transaction value, merchant category code, MCC, and type of payment method, along with how customers connect to the site, including IP data, device type, and geolocation, as well as how they behave and interact with the device during their session. Continuous authentication is a key trend to verify users' identity throughout their entire session, rather than just at login. This can help in preventing unauthorized access and decreasing the risk of fraud. In addition, the adoption of multi-factor authentication will continue to increase and leverage some of the industry standards such as 502 to move towards the device plus biometrics as the preferred combination. We're going to be releasing a study soon that looks at the different ways to authenticate and the preferences along different age groups. So the older generation prefer, passwords and OTP, where you see the young generation start to really embrace biometric authentication, right? So the millennials are embracing basically using fingerprint, and the younger Gen Z ones are actually starting to be very versed in using basically facial recognition and liveness detection to be able to authenticate. And as you see payment methods proliferate, whether it's buy now, pay later, or leveraging account-to-account and real-time payment rails, you'll see new vectors of fraud and scams, such as authorized push payment fraud, where basically bad actors, scamming you into paying them, thinking that they're a legitimate merchant, or essentially for a reason that is not, what you're thinking you're paying for.
Maybe Shankar or Rajesh, maybe can you pitch in and share your perspectives on the trends and you guys are seeing from within Capgemini and the echoes you're getting from your customers?
Absolutely. So customers right now are kind of straddled between two worlds. The original world where this whole fraud monitoring used to be done based on policy rules. But now with what Paul was explaining, the amount of data that's available, the number of attributes that are coming in, number of features that are coming in, it's becoming more and more unmanageable, because you would very quickly, what used to be like 100, 150 policy rules is now expanded to like 350 policy rules or something. Because with the number of features, the combination of these features also lead to more and more policy rules. Now, what happens with so many policy rules? One, it's unmaintainable. Two, it also leads to a lot of false positives, as in you're going to have a lot of manual investigation into cases that are being flagged as fraud, but actually it's only because one of these 300 odd rules, something gets misfired, and that's the reason somebody gets classified, that particular transaction gets classified as fraud, and there is a bad customer experience because of that false positive. And at the same time, when you move towards the other world, the world is going towards, the customers are going towards, is using machine learning models. Now, yes, machine learning models are good and increase the accuracy, which is fantastic. Now, if fraud is a very fastly evolving world where there are new patterns emerging on a daily basis. Now, that was to Ajit's point of saying fraudsters are finding newer and faster ways of doing this, right? So now when you go towards this kind of a very fast evolving pattern, then the machine learning model captures only things it's actually trained on. So there will be a period between, like, say, for example, today versus the next month or next 2 months down the line, when you will retrain the machine learning model, there will be an intermediate period where some of the new fraud patterns will not be caught. So now between these two worlds, when customers are caught, what needs to happen is many people are looking at it from a lens of whether it is business rules only or machine learning model only. The answer is actually you need something which is more of the realization is now striking upon people that you need a combination of them. Instead of like 300 of those policy rules, you probably need one machine learning model or multiple machine learning models, and probably 15 or 20 of these policy rules, which actually will help you add agility in terms of reacting to evolving fraud patterns. So that's one important thing that's actually coming up as a requirement we see across multiple customers. They want agility, they want accuracy in terms of not having having a superior and rich consumer experience. Reduced false positives is what they want. So these are the three major important things that are actually coming up. The last one being not just from a consumer experience, you also have to look at the person who is drafting these policy rules and business rules. They need to be able to make these changes very, very quickly. So instead of having to go and actually write it in an enormous amount of lines of code in a technology which they don't understand, these fraud strategy business users are the ones who should be able to directly edit and maintain and actually have the ability to do test and learn and stuff like that. So these are the trends that we are watching in the industry today in terms of what's required. And right now it's in a transitory phase where people are trying to straddle the old world and the new world. And there's a lot of user adoption issues in terms of believing that this new world will actually work or not. So another important thing is, how do we hold their hands, take them from the old world, help them experiment, test, and move them towards the new world in a gradual manner so that the program adoption is not at risk.
So I just want to bridge a little bit from what Shankar was saying into, sort of introduce the concept of hyperautomation. In terms of evolution, what we saw was, we went from manual, many decades ago, to a rules-based one, to a heuristics-based one, to a ML-based one, and now like generative AI-based one. And it's like, you started to kind of focus on the more advanced technologies. What we're starting to see is it's not like, I think Shankar mentioned this as well, it's not any one of those things that this should be allowed to dominate, but you should try to put together like a very, very efficient end-to-end process. That is to say, we want to bring all of them in. And really, there's also like a trick to building these solutions. So you shouldn't send, in my opinion, everything through a machine learning model for scoring. There are some things for which you can actually do like a screen and immediately kind of understand that there's a problem, get that out of the picture to make things faster. And when you actually get to the machine learning piece at the end of the stream, after you've actually done all your eliminations and so on, through heuristics and blah, 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 what you want to do is, it also turns out that you might need multiple models for multiple parts of your population. There's like, if you have 3 or 4 models, it might turn out that, one model of those actually works better for one subset of the population. So that also is kind of like a really weird way of thinking about it. There's also rules involved in that piece as well. So what we're basically saying is, can we put together all this using the intelligence that the guys have on the floor to have the right sequence in terms of basically saying, what should we do first versus what should we do second and so on. And at the end, have actually build like an elegant user experience for the various personas. So, whether it's the fraud analyst people or the rules authors or whatever it is, what you want to do is actually create like a really elegant experience, like super fast experience for those people as well. So I think that's what we're starting to see with hyperautomation. I think Veselin will go more into this stuff. We can think of this as RPA, but it isn't really, because RPA can actually stitch these things together, but it actually takes several minutes to do something, versus hyperautomation does all the things, but it's just really fast, right? So with that, let me actually turn this over to other people that can talk more deeply about the technology. The key idea that I wanted to get across was, you need to stitch these things together. And there's a solution engineering piece that basically has a lot to do with in what order, on what things, and so on and so forth. And there's a lot of that needs to happen as well.
Yeah, so maybe let's move to Veselin. I think Veselin, you have plenty
of experience
in hyperautomation. It would be great to hear your thoughts on this, and also what kind of challenges you've experienced when implementing these kind of solutions with customers.
Yeah, indeed, hyperautomation, it's relatively new, but it's not so new, so to speak. And in many industries, there are already people and companies applying hyperautomation technology. Having said that, hyperautomation as such is an overloaded term, and we really have to distill it in correspondence to a particular vertical, what actually that means. In some of the verticals, that can mean something like RPA, which means I have the document processing, I have to go through some orchestration, or if it's in market automation. But specifically, when we talk about finance and some other verticals, that orchestration technology really has to deal, or what Rajesh says, stitch all the information and signals together with unprecedented speed and scale. And it really has to take these signals that come either from the mobile, from the machine learning, and as well being able to embed a subject matter knowledge through policies and other things, and all they put in one place, such that you can new, actually, if you like, new paradigm can be deployed at scale and be scalable. That specifically means in the finance sector that if I'm to deal with transaction, we're talking about millions of these. This can be in real time or in a bulk. So you really have to have a technology that managed to put all these things in one place, rather than having, let's say, hundreds of microservices. You really have to have a technology that can put all these things together, work on top of these signals, and actually provide a particular decision. I would also like to say that, in my view, often in the past, people talk about rules-based systems as the means to express the knowledge. Over the time, people have started thinking about machine learning models as a means to delegate decisions. For instance, if you talk about anomaly, you delegate decision about anomaly to a particular machine learning model. What are we actually observing? In many cases, that it's not one or the other, but basically you have to use both of two worlds. That is to say, some of these things which are obviously fraudulent, you do not really need to waste, so to speak, cycles. While for some of the things that are really, really pretty fishy, you better delegate understanding and whether something is fraudulent or not to the machine learning models. But again, as we all know, machine learning models come with the probabilities and the likelihoods. And some of this you again want to adjust. It's not the same if you pass through the machine learning model 1,000 or 1 million euros. So basically you want to be absolutely certain that for high transactions, you have a high confidence that this is not a fraudulent payment, and so forth and so forth. So these are my observations that I also derive from some other solutions. But again, in the context of the payment, these fraudulent payments and false positives can work in both ways. Either you pass something which is obviously wrong and you pass it as not fraudulent. On the other side of the spectrum, if you're really too sensitive, you can start really disabling genuine transactions. And again, that impacts the user experience. And probably many of you had, like me, very often block my transaction or card because it seemed to be a fraudulent, and obviously that's not a pretty interesting environment to be in.
No. Indeed, is that something you can maybe explain also in the context, Paul, maybe, or Ajit, within your environment, whether you see some of these same challenges? I guess some of the challenges in general are not necessarily technical, but also at an organizational level, where different groups nowadays are involved actually build this kind of hyper automation solutions versus maybe the rules-based only solutions you guys had in the past.
Yeah, definitely one of the key challenges that we hear from customers is like, to have good fraud detection, you need the data real time, right? So big data and analytics are an essential tool for detecting and preventing fraud. Cloud platforms provide the scalability and compute power to analyze large volume data in real time. So there are several steps to developing and deploying a fraud detection model, such as data preparation. You have to have good data, model development, model deployment, and model monitoring for any kind of drift, right? And retrain the models. Data scientists at banks can use ML ops practices to ensure that the model is developed in a consistent and reproducible manner, using best practices for data analysis, feature selection, and so forth. And so what we're seeing, banks do is really, they've historically been more batch-based. They're starting to leverage definitely real-time data sharing, and the payment world is going to move towards more data consortiums, right? The ability to contract with other parties to be able to pull the data all the way from the acquiring side to the payment network side to the issuing side, to really have a holistic view of the transaction data points, and also bring in the consumer data points to make sure that, hey, like, you're blocking some of these bad transactions, but allowing the good transactions to go through.
I think Shankar mentioned. I'm sorry. I think Shankar mentioned at some point the fact that indeed these machine learning models need to adapt for new kinds of fraud. To what extent do you guys see like ecosystems develop where parties share some of these learnings? And maybe it's still early days in the context of hyperautomation, but I'm wondering whether you see like a trend there or some evolution.
I can, I think I just want to double down on a comment Paul said, which is so the evolution towards consortium and data sharing. I definitely see that as an evolution where if a fraudster or a bad actor is targeting, say, a specific financial institution, it's very likely that they're doing it as an industry level target. So if Wells Fargo is experiencing an attack, the fact that someone else in the industry was targeted using a similar tool, tactic, technique, or procedure, and we're able to sort of share aggregated information or valuable intel and be able to react and respond, perhaps in a more proactive basis. I think that's going to be a significant evolution. I think it's going to also add a layer of that data complexity, but it also gives us that streaming or batch evolution of data. How do we sort of react and respond to it? So I definitely think what what Paul mentioned as a sort of a consortium based or like I hate to use the word crowdsourcing, but the more defenders are able to exchange and share data, not just in a batch mode, but in a real-time mode, and be able to respond in sort of that automated basis. How do you stitch workflows together that are not just unique to you as an entity and to your customers as an entity, but how do you take care of ecosystem as an entity and be able to accommodate those workflows as part of your decisioning? I think I definitely see that evolution or that convergence.
Is that a big shift in the way how organizations need to think about preventing fraud? Or is it difficult to create that mind shift and indeed steer people away from just using maybe some of the rules and policies that they've had for the last couple of years and put a bit more trust in this combination of rules and machine learning models?
Yeah, I think one of the bigger trends that's going to push more towards data sharing is real-time payments, right? As banks adopt to ISO 2022 standards, and as market infrastructures leverage ISO 2022, you'll see real-time payments starting to grow. It's already been deployed in a majority of the mature markets, and emerging markets are starting to adopt it. And so with real-time payments being used for use cases such as B2B payments, and with FedNow kind of launching this July, you'll see the financial institutions start to move towards leveraging real-time data for fraud prevention.
Yeah, I would just like to add to that again, because again, so resonates so much to some other things we've done. What you see happening is that one of the reasons that we are promoting our technology that can work both with the data streams and other sources of information, is that I see the evolution from, if you like, particularly from the stream processing engines to more flexible engines. And one of the reasons is that I can imagine a place where you have a federation of companies being able to access information about fraudulent IP ranges, which can be compromised in real time, or credibility scores or merchants, and so forth and so forth. And these things really change in real time, and often you really need to use that information at that moment in order to actually pass or not the payment. Yeah.
Just also wondering in terms of overall benefits, I think we've highlighted already quite a few of them. What do you guys think is going to be the real driver for pushing companies in general to move from the way how they dealt with fraud prevention or detection historically to adopt this new kind of technology, maybe experiment and make this transition successfully from the legacy state that they're currently into to this new technology?
Yes, I can take that. So what we are observing in many of the conversations is basically, say, for example, you are in the old state and you want to basically say, let's use boxing terminology here, saying champion and challenger. So the champion is the reigning champion. That means that's the set of policy rules they're running with. So basically you have the champion handle, say, 90% of your population that's coming in. And your challenger is the one that's the new hybrid way of handling things with machine learning and policy and some business rules, right? So now 10% of your transactions are going there. So then people want to basically observe for, like, say, X number of months, maybe 1 month or 2 months, depending on their actual situation in terms of they want to actually observe, okay, how much false positives do I have? How much false negatives do I have? They basically want to evaluate which model is actually working better. And then say, once they have gotten the confidence, they basically say, okay, can the system or solution which you're suggesting support both the worlds and allow me to kind of divert, say, X percentage of the population to the old world and 100 minus X into the new world? And then slowly you can take it up, like say, if people are comfortable, like say 10% or 5%, and then from 5%, you basically take it to 25%. You see whether it's scaling up nicely, going well. And then from there it goes. So this is like a gradual transition, because one, the old world people who are used to certain ways of working, they are going to be stuck onto that. And to actually convince them that this is the new world and this is working better is important. Similarly, the people who are sitting on this side of it saying machine learning is going to solve everything, they also need to actually have. So instead of taking anybody's word for granted, the ability to actually experiment and do this kind of a champion challenger on the old versus the new world order of doing things seems to be one of the most important capabilities many companies want.
Sorry, is it fair to say that you can compare it with like traditional A/B testing almost in the online world, where you maybe run both in parallel and then ex post compare what the results would have been, and indeed build that confidence then to do the transition? Is that a fair statement?
Yes, A/B testing or champion challenger. I like boxing, so I kind of used boxing terminology.
Oh, fantastic. Sorry, Veselin, I interrupted you.
No worries.
I just want to share something I'm sort of passionate about as well, right? In that context, you basically say, look, if you build a solution, you know, what you're looking for is like 4 things to get better. One thing that, or 4 things that we worry about from a solution engineering standpoint. Number 1 is, you know, is it effective? Is it doing the right thing? If it isn't effective, it's kind of like a turn off. Second thing is it efficient? Is it doing things right? If you can actually have like a process that's 15 steps versus another one that's 3 steps long, what would you use the 3-step process? And if there's like manual steps, you'll actually see like labor productivity improvements and all that kind of stuff. And the third thing, I don't think we actually pay enough heat to it, because we're so caught up on this efficiency piece, and sort of like is frustrating for me, because I think what we really need to do is kind of drive the experience piece. And this is especially important for our internal folks, if you ask me, right? I think that we're all very, very sensitive to things that we actually build for customer-facing things. And we get it right some of the time when we pay a lot of attention to the customer-facing workflows. But for the internal things, we seem to always give ourselves a pass and build whatever together. It's just kludge things. And I think that's a terrible idea. And I think that what we need to do is kind of figure out how we drive the internal experience for the various personas and have that kind of drive it. And so look, if it's not effective, you will get that through what you're tracking on the experience side. If it's not efficient, you will track that. And the last thing is, of course, the ethics piece as well. But my hope and my wish is that we get the experience and our concern with experience on the internal side be a very, very important part of what's driving what we build. So that's one of the things that I just wanted to add to what Shankar was saying.
I just want to chime in and say I really like the boxing analogy that Shankar mentioned. I think part of the thing that gets lost in what we are trying to do, I mean, I guess the tooling and the way we get to defend is one part, but I just think of like one of the things that we see quite often in my world from a bank or a financial institution standpoint is elder scam, right? Like think of the 75-year-olds who have saved their entire life's worth of savings, and they get this really extraordinary and well-crafted position to say, hey, you can double by investing in X property or Y asset, and all you need to do is click that one magic button that you'll transfer and will automatically get you like 100% benefit, right? I mean, when we think about those kind of scenarios, right, like especially as the world is moving to digital real-time payments, the ability for a fraudster to transfer that money, convert it into a non-immutable or non-exchangeable format of currency, and it's gone, right? I mean, those are the scenarios, those are the things I think what we're trying to do through hyperautomation. So I really like that boxing analogy on it. Sort of reminds us on why we're trying to do this. And also, I think it ties to the incentive for the customers, right? Like, anytime we're sort of in that rules-based or a system, we are sort of operating on fraud as a claims-driven instrument, which is anytime t plus 1 second, you're reacting now to an event that has already happened. So how can we tie this together? How can we make as close as possible to what Paul mentioned earlier on is real-time streaming data that perhaps has been validated, vetted, and this data is exchangeable and is able to enforce sort of a just-in-time prevention or a step-up authorization, additional verification policies. I think that's the incentive of hyperautomation is be able to transparently or asynchronously work in the background, collect a whole bunch of data, and be able to inform whether it's a rules engine, whether it's a model, or whether it's a human analyst of looking at a pane of glass, right? So how do we inform, be that AI assistant, I guess, to sort of make better decisions? That's how I see the sort of the world coming together, at least from my perspective.
I think Veselin,
I would like to add, yeah, I wanted to kind of get into this conversation as well, but maybe from another angle. I think there is no better testament that a particular, if you like, vertical, it's very conservative if we still talk about mainframes and COBOL as the main still a driver for a lot of payments. So, and what I see already being actually happening is that people are thinking about cloudifying their mainframe applications and moving them to the cloud. But I have to say this is only the first step. That is to say, I'm delegating a computation to someone else. I don't have to actually manage that. Having said that, there is a second phase coming, which is to really benefit from the cloud-native applications. That's slightly a different thing. Cloud-native, it's not necessarily what we mean by cloud. In a sense, this is, again, composition of applications and practices which make use of the latest technology advances in the cloud compute, infinite scale, and so forth and so forth. So I want to say that maybe instead of going for a two-phase approach, we can go all at once by implementing the new cloud-native paradigm to actually move the businesses and solutions from something which are the old style to actually the new paradigm. But I actually understand there is still some level of skepticism which I actually have to bridge. And one of them, coming back to deployment at scale, it's another thing that I see it as well in A/B testing sense as a two different levels of confidence you have to build. One of them, does this thing really does what it's supposed to do? And secondly, is it going to work at the scale when actually I should have to turn it on from 5% to 100%? And this is again something that I've seen in some other industries. One of Waylay's customers is Tata Communication, which was again facing similar problems in other industry. But again, we've seen belief system moving up and up across the organization by understanding that you can really implement in very agile way new services that are tested, deployed at scale, almost in the record-breaking times. I'm talking about hours and days, not anymore about much longer periods between testing new ideas and being able to see them deployed in a robust and scalable way with all other things which are required for industries which are sensitive to, the intruders, sensitive to they have to work 24/7 and so forth and so forth. And again, all this you can benefit from once you move to the cloud-native environment.
Maybe we can take a question from the audience now. We have a question from Kumar, who is essentially asking how hyperautomation can help with identity theft or data overload attacks, given that fraudsters are currently using generative AI for synthetic identity generation or fake data generation.
I can take that question in parts. Like I can address the first part of it in terms of synthetic ID. So now think about the whole process of fraud transaction monitoring, or like say in this particular case, this is more like a when the person is actually faking an identity to apply for a loan or something like that. It's more like a loan origination or a credit origination kind of a problem. So I just wanted to draw that distinction first. So there, what happens is there are two parts to this. One, you need to go to different data providers like the 3 bureaus and probably LexisNexis and like a bunch of them who actually provide what's called ID verification services. And one of them would be a typical what we used to call a synthetic ID score. So there are multiple of the bureaus as well as non-bureaus who actually provide this service. So the first part of what the solution needs to do is to go and pass the information of whatever is the applicant's information, the synthetic fake ID created, pass it. They return back a particular set of data elements, which would be a score, some reason codes, and probably some explanations, and maybe even some elements which you can use in your policy rules. So when such a thing happens, the second part of it would be when you go through this particular solution of fraud monitoring, then you need to basically take those inputs as well as other inputs, like maybe it could be biometric, or it could be something to do with the device ID. Say, for example, the device from which the person is actually saying that they are from Chicago, Illinois, whereas the server from which the information seems to come is actually Nigeria somewhere. So basically there is a gap between the time zone that's used. So the digital signatures can actually tell you some information. So you have multiple such data sources today, and there are data providers which provide all this data, and the solution needs to go pull all of that data and then call this fraud detection solution. And then we are able to like put together, the idea is to kind of put together the combination of rules and the machine learning model, which will basically say, yes, we have identified this as a synthetic ID fraud, or it could be that the data was generated was fake. There's no such person that exists. So it's a combination of going to a data or a bureau provider and also factoring it into the business rules and or the machine learning model. So that's basically addressing the one half of the question. I'll let the other panelists address the rest.
Maybe Paul or Ajit, are you seeing these?
Rajesh is on mute. I don't know whether he's aware of that. I think. Yeah, okay, sorry.
Yeah, Paul or Ajit, I'm not sure whether you've seen this kind of fraud or these kinds of attempts used by fraudsters already currently within your environments.
Yeah, I mean, we're definitely seeing this being addressed by a lot of these KYC AML providers. So as you know, as you look to a world where it's more digital onboarding, so you know, both customers and merchants expect to be onboarded within minutes, not days. You know, there's a lot of providers out there in the marketplace that are providing, you know, these checks and also helping orchestrate these checks, right? So you have a company like Alloy that's cloud-based, that's working with multiple vendors, orchestrating these capabilities and helping these banks and fintechs make decisions rather quickly. And they're taking, you know, your image, when you're uploading your license, doing those comparisons, checking against the bureaus, as Shankar mentioned, right, and coming out with a score. And then also for some of these fintechs are helping you provide a decision that you can consume and then basically you know, approve or decline. So you're seeing a lot of these vendors very mature in the US, and you're seeing them scale up into other emerging markets. And so they have an entire global database that has, you know, captures where they've seen photo IDs with fraud. And a lot of these, you know, fraudsters use the same, you know, picture, right? And so you're seeing them be able to detect that really quickly and at a global scale because they're forming those databases across markets.
Just to add to it, probably there's a combination of these different types of checks they're doing. Like one could be the liveness checks or the photo checks, which Paul was mentioning. The other, the synthetic ID. The third one would be a device profile check, or it could be even like the same email address has been used in multiple places. So now you don't have to do all of them for every single application. You can actually segment it based on, say, if this is coming from the internet online application, so I see that these checks are most important. And the second part is not just that the combination can vary based on factors. You could also have a sequential and a conditional next step. So you don't have to go to all four of them all the time. You go to one and then you decide based on the input that comes back and says, let me now decide to go to B and C, which is like more a phone check plus a device check or an email check. So that kind of a conditional sequential data access is another important factor in how these applications need to work as well.
Yeah, I was trying to get in there as well. And I think that's key what Shankar was talking about. And I think that's a reason why the stitching together of multiple ways of doing things is really important. Like it's always going to happen. I think Ajit talked about it. Other people talked about it. There's like always like new fraud schemes and so on. And then you might not be in a position to actually have a model built and tested and vetted and validated and all that kind of stuff. You're not going to throw up your hands in the air, or you shouldn't have a system that makes you do that. The idea is, can you start with something that's a rules-based thing or some heuristics-based thing and kind of integrate that using this low-code, no-code orchestrator of native services to get started as you find new things. And it's something that sort of Shankar told me a long time ago. And I've kind of stuck with me is, there's a first level response that you do like instantly from the business side without actually having to wait for the models to be built and so on. But as you get more sophisticated, you'll add more components of it, or you kind of rejigger the system, this hyper orchestration system or hyper automation system. I think that's super key is being able to actually respond quickly with some very simple things initially for new things we're starting to see.
Yes, so if I'm hearing you correct, then one of the big benefits of hyperautomation, maybe in contrast to some of the more legacy systems, is that you can indeed start more nimble and start with something relatively straightforward or easy. And then once you get built more experience, increase complexity when it's actually useful and not just do something complicated, just to do something complicated, right?
Yeah, I think the idea is to remove the frustration for people that are in the field by saying, look, I already know a few things about this stuff. Let me build something simple for right now. But that sort of is part of that overall workflow. But then I'll actually evolve it over time to actually be a much more sophisticated, stitched together solution.
Veselin, maybe is that something you're seeing in your experience as well? Like customers that start relatively with something easy or with a specific use case and then expand on that?
Absolutely. I think that obviously we always pitch that we can solve the complex problems. Nevertheless, often very first problems are rather obvious and trivial, if you like. Having said that, I think that one of the things that resonates a lot with me is that I often have a hard time at the very beginning to explain what we actually do different to others. And I would just like to, again, repeat some of these things. It is not only the data stream. It cannot be only decision tree. It cannot be only machine learning model. Neither can be only the API, but all these things together, so to speak, what Rajesh is then calling stitching things together. It's a very complicated and very complex technological challenge to address in really at a scale. And this is what we bring on the table. But we also talked about federation, being able to emit your information to someone else, such as there is a compromised IP address range or a compromised ID and so forth. All these things happen in real time. And obviously, fraudsters are using that. And it's the best defense that banks as well start using very similar technologies to their advantages as well. It's a very fluid environment, and faster and easier you can play with these things and deploy at scale. And again, this is another key. You really have a better chance of winning this game.
I agree with Veselin. I think sometimes the challenge you have with these kinds of solutions is that it is a low-code, no-code environment, and some people still see it as a gimmick or as a toy almost, but they don't necessarily appreciate the technology that is behind to make this stitching in real time actually work with the volumes of data that are currently going through the systems.
Yeah.
So it's really amazing what is possible nowadays. Huh?
Indeed, and I have to say we have not started obviously in finance. I'm really new to that, but again, our testament to what we've been doing in other environments where scale and the amount of data and things we had to do was really, really in hundreds of millions. It really is applicable to this world as well. And indeed, this is what we observe, and I'm happy to be here.
Maybe another question from the audience, from Alistair Coates. How do you see AI supporting interbank collaboration to tackle fraud?
I can take a first pass at it. I think we have to account for a couple key issues. One is data governance, and especially data localization issues. You know, different banks or different financial institutions or any e-commerce entities, right? You have your customers, you have a global customer and a local customer, and at the end of the day, you have to follow your local, federal, or state laws as it makes sense. And what those geolocation policies with respect to customer data, what does that mean? And then in turn, what does that mean if we talked about earlier at the beginning of this panel discussion on usage of Gen AI or modern LLM based technologies, like which part of that data becomes part of a training data set. So I think as part of that, and I know we also sort of briefly talked about the notion of a consortium and being able to link data together, not just within your ecosystem, but also within the broader industry ecosystem as it makes sense. So I think those are the key things that need to come together is how do we account for data governance, data localization, being able to use that data to sort of train your AI or your rules engine, and how do you aggregate and disseminate it so that such that it's not like a massive batch data set, but how can it be useful sort of on a streaming real-time basis and be able to do that really sophisticated link analysis behind the scenes to aggregate. I think some of the things that Shankar, Veselin and others have pointed on, these set of devices are being used to target accounts that are being cached in this geolocation or this zip code or this ATM in this state. But the infrastructure that's being used is a common set of infrastructure from these 10,000 different SSL certificate origin, infrastructure assets on these IP addresses against these customer accounts. And then I put in attributes of behavior biometrics, knowing the customer from their behavior analytics standpoint and stitching that and being able to do a real-time decisioning, right? So I think that's how we do it. It is quite a sophisticated dance, I think. But there are ways to do it really well. And how we do it, I think, will definitely determine how successful we are.
Okay. We have another question from the audience from Sorav Biswas. Apologies for the name if I mispronounce that. Basically, the question is like in the hybrid approach where you're leveraging machine learning, fraud detection models, rules, policies, etc. He understands that, or he or she understands that rules, policies can be changed in real time on the fraud platform. But what about the models? Are those self-learning models that adapt to changing fraud patterns of vectors, or does it actually require a planned release? Is there another maybe or a new hyperautomation use case there?
So we can, right? So it's possible in tomorrow's world with Gen AI and so on for people to actually build models and test the models and so on. I think that, there's just this additional layer of model validation and so on that basically has to be addressed. And I don't think we want to actually circumvent some of those processes. So there's a certain rigor for very good reasons. So I think that, we just need to go through those regular, whatever the institution does, we need to follow those policies in terms of how these are vetted and approved for use and so on and so forth. So I think that's what the issue is. There's a fair amount of some testing you can do. You can actually build some models and glean some insights in terms of how you do it manually and rules wise and so on. But I don't really think you should do that in production. I don't think anyone is going to let us put it into production by bypassing protections that you have to take care of for model validation and so on.
Adding a second point to it, many of these models need a high level of explainability as well. So this whole explainability kind of gets compromised if you're changing models in real time. Then what ends up happening is that's going to kind of create a lot of chaos and confusion when you're actually analyzing what went wrong in a particular case. And you're kind of opening yourself to sometimes maybe even lawsuits based on discrimination and stuff like that. So you don't really want to get into that arena. So you need to basically be very, very careful. These what we call as MRM and V, the model, the entire validation process around when a particular new model is recalibrated, retrained, or new fraud patterns being incorporated into it, you need to have them completely vetted through the compliance things, as well as ensure there's a good amount of explainability, without which basically you kind of keep yourself open to all the regulators coming back to you. So that's another important point you have to keep in mind as well.
Did you want to say something?
Yeah, one thing I can chime in is to sort of think of threat hunting as a well-established pattern, right? So you have copious amounts of data, and sometimes the models or the analyst is only able to react to the data that's being presented to them, or their application of intelligence to react and respond accordingly. So the notion of threat hunting shouldn't be lost. And I think just to address Saurav's question, right? And also something that Shankar brought up earlier during the panel discussion on the notion of champion challenger. The way at least I look at it is a sort of an A/B model on something that you have in production. If you have an active attack underway, have your best experts write in a custom rule, stop that threat, as close to real time as possible, but leverage the concept of threat hunting to mine your data. Because fraudsters don't, at the end of the day, it's a business for them. So they are very smart with respect to how they're approaching it. And it's not just a brute force mechanism or a firing by the hip response. So they're very thoughtful in how they target an institution. So there's data and evidence buried against it. So use that concept of threat hunting, run like a challenger, like a B model, and see and score in silent mode. How is that responding? How is that doing? And your primary A model is scoring all the time. And then, adapt to it, right? And always don't discount the power of your SMEs, your human experts who are watching the glass all the time and are able to counter and respond to a threat, right? So I would always think about it that way.
Another question from the audience: do we foresee fraud decisioning moving more towards AI, ML-based solutions, specifically for analyzing and prioritizing the multiple fraud signals being generated from rules, internal AI models, data collaborators, intelligence providers, etc.? Anyone want to take a stab at that?
Well, if I may just say, because it really goes back to what we just mentioned, and it then builds on that. First of all, if you build a new machine learning model in the classical sense, you really have to have a training data, annotated training data, to know what is fraudulent or not, to be able to benchmark these machine learning models. Having said that, you can also use machine learning models to understand there is something fishy ongoing. So it will be like anomaly transactions that you do not necessarily know what is it, but you understand something is happening. And again, this also can be used as a signal that you have to check or alert someone else. So you can even imagine rules that are not necessarily per transaction, that are actually going through the broader scope of transaction over time, and basically being able to infer that something is happening. You do not know it on a particular one transaction, but this is something that obviously people should be doing. And again, coming back to answering that question, I think there are small nuances to that, at which point in time we feel ready to delegate decisions to the machine learning models. And again, there will be some regulative reasons why you cannot really do that. And secondly, there are some places which might be able to basically think in that way. But again, this is something that some other people better answer than me. Hopefully I answered that question.
Yeah, and what we're seeing customers do is they're basically building a modern fraud prevention platform. What they're doing is leveraging pre-trained models from vendors like Waylay to really test it out against the historical data, right? And then as these machine learning models continue to be retrained, they're also learning, right? They're making suggestions, even rule-based suggestions to the fraud experts to incorporate into their overall system.
Yeah, just adding to it, you could have exclusion rules. Like, say, for example, some of these rules could be like, if this particular criteria is met, you don't even need to go through the machine learning model, maybe. Or there could be rules which are post-machine learning execution rules. Like, okay, the score has been calculated. Now the score actually is indicative of what's the probability of this transaction or this particular account or this particular person being fraudulent, right? And then this could be a decision saying, if the amount is greater, like this was one of the examples Veselin was talking about, based on the amount of transaction, you want a higher level of threshold before it actually passes. And it could be based on what's the channel, a more riskier channel versus a less riskier channel. So you're going to have exclusion rules. You're going to have post-scoring rules, and that can take into account a lot of these things. So it's not just thinking in terms of only machine learning models are going to make the decision for you. It's going to be a combination of exclusion rules. It's going to be some machine learning model and maybe some segmentation and some thresholds, and all of this combined together running. We think that's the hybrid future we are marching towards, in my opinion.
As we're approaching the end of the hour, I'm just wondering whether any of you have any parting thoughts that you'd like to share with the audience.
I think I can go first. This is a evolving field. I think as defenders, we want to take advantage of hyperautomation as a core competency to just bring in disjointed data and intelligence together and be able to react and respond quickly and prevent financial harm to our customers. And this is it. I mean, we'll have to do it thoughtfully, account for data governance, provenance issues, any regulatory legal concerns, and do it well. We have to establish sort of that cadence with and be comfortable with industry sharing of TTPs, and how can we sort of rise a boat for everyone together. So I think there's that's a bit of a journey, but I think the outcome seems to be very obvious, and the business case is very strong to execute hyperautomation. So I'm really excited for the future of our as defenders, how that's looking like.
Yeah, and I just wanted to add this, right? So hyperautomation, we just talked about hyperautomation within this fraud context. It's kind of like any other technology / tool / platform. Hyperautomation is a secular facility that sort of helps with anything that we do for building applications. Basically, it's a low-code orchestrator of native services, or no-code orchestrator of native services. And this is something that everybody needs. And with all the issues and the complexities of fraud, it could be like a huge boost for what the fraud guys are doing. And I think that's really what I want to point out is you don't want to leave this tool out of the arsenal that the fraud guys have access to, in my mind.
Yeah, the last point I want to make is kind of like, it's all about agility, right? So with new fraud vectors, what we're hearing from customers is they need to basically train their models, have purpose-built machine learning models for specific verticals, and then be able to retrain, identify drift, and be able to redeploy them as soon as possible to deal with these fraud threats.
Veselin, any parting thoughts?
I can only agree with all other panelists. So, and again, we as a technology labor definitely agree with all of that. So,
yeah, like maybe I would conclude and maybe leave the audience with a few key takeaways. First of all, I think hyperautomation is not just a buzzword. That's what I learned. It's very practical, and it's an effective approach to bolstering fraud prevention efforts. Second, it's a collaboration between human experts and automation, and that is crucial for enduring success. And maybe third and last, the ever-evolving nature of fraud requires continuous adaptation and vigilance. And so once again, thank you to our panelists, and thank you for the audience for joining us today. We look forward to continuing these important conversations and driving progress in the field of fraud prevention and hyperautomation. So feel free to connect with any of the panelists to have a further discussion on this topic. With that, I would like to officially conclude our panel discussion. I'd like to say goodbye and take care.